On Wall Street, coffee, bagels, and Squawk Box. Wake up and smell the money. Squawk Box, weekdays only on CNBC.
Trading activity is underway here at the New York Stock Exchange. Waiting for the Fed, the markets are higher across the board. Mark, they've been just celebrating your return all week here.
Yeah,
now they're really higher. We got the Dow up 66 points. Most actively traded tenant settling with the DOJ there, and over at the NASDAQ, we're higher by about 20 with the Haynes effect. Microsoft leading by 30 cents. And David's got some home improvement to talk about.
Well, Aaron, I couldn't help but notice that shares of Home Depot down yet again today, despite what is almost all green, at least on my screen, including, of course, its main competitor Lowe's. Take a look. I mean, Home Depot has really suffered from that decision that Bob Nardelli made to have a very unshareholder-friendly annual meeting a few weeks back. And, of course, that decision to suspend same-store sales delivered on a monthly basis. Both of those adding up to what is, well, you can see it right there, not been a pretty picture for Home Depot shareholders. That stock really at a new low, again, down today, despite what is an update for most of the major retailers.
All right. And want to make sure everyone hopefully will stay with us today because 215 Street Signs, I'm going to be with you. We have an amazing Fed show lined up for you. The biggest bond fund manager in the world, some of the biggest stock fund managers in the world, former Fed governors, the head of the President's Economic Council. It's going to be a great show, so we hope you'll stay for that.
Okay, this is a very strong up move we've got going on right now. Gaining volume is outnumbering down volume by almost 8-1. So stick around. We got a good day on tap. I'm Mark Haynes.
I'm Aaron Burnett. Have a great day. Morning calls now.
And welcome now to Morning Call. If I had another hat, I'd change it. I'm Mark Haynes at the New York Stock Exchange.
And I'm Liz Klayman at CNBC Global Headquarters. Decision day finally here. About 1 hour ago, Federal Reserve policymakers began their second and final day of meetings and are expected to announce a 17th consecutive interest rate hike at 2:15 p.m. Eastern Time. But the watch is on to see what the Fed might say in its accompanying statement about future moves. The more the Fed raises interest rates, the possibility of a soft landing becomes less likely. Are we at risk of a recession? CNBC senior economics reporter Steve Leisman is here now with a look at what's at stake for the economy and investors. People have been worrying for some time now about this recession possibility.
Can you say 18, Ms. Clayman?
I don't want to say it.
You don't want to say 18? No. I don't want to either. But there are some fresh warnings out today. We're laughing about this, but there are some fresh warnings out today from those who think the Fed is going too far and that there are risks of an economic slowdown on the horizon. The Fed likely to bring its overnight lending rate up to 5.25% today. Remember the days when it was 1%? Markets will be listening closely for what signals the Fed sends about number 18. Moody's chief economist John Lonsky noting that there have been few business excesses this cycle and that there is little wage inflation. So he warns in a report today, quote, whether or not the U.S. economy incurs a hard landing largely depends on how skillfully the Fed firms monetary policy. That is, it's up to you, Ben Bernanke. He notes that the Fed has already caused a housing slowdown. A more severe slowdown, he says, could lead to a sharp decline in consumer spending. That could put, and I quote here, unbearable stress burner as an issue.
Just to be fair,
right,
there is the other side. People who think that the Fed needs to continue to tighten. What about that?
Well, we've been reporting about that too, Liz, over this past week leading up to the meeting. Their argument is as follows, that we have higher inflation or core inflation. We have still high oil prices and relatively high commodity prices, even though they've eased back. That puts a lot of pipeline pressure in. The big question, the conundrum out there that we haven't spoken a lot about, wages. Wages are what's really going to determine whether or not we have an inflation problem in this country. We have not seen an increase in wages that would cause an inflation concern. But the issue is that we have a productivity that's been soaring. There are all kinds of reasons for wages to rise. They haven't. So there's fear that that may be something that caused inflationary pressure down the road.
Don't envy these guys, that's for sure.
It's not an easy call today. It's not an easy call. You have strong opinions, but it's not an easy call.
Steve Leisman, and of course, CNBC will bring you the decision as soon as it is announced. Once again, 2:15 p.m. Eastern Time. Don't miss it. Street Signs, 2 p.m. There will be intense coverage and analysis on this, Mark. I know you can only imagine how closely we'll be watching it.
Intense.
Yes.
Stocks continuing their upward momentum from yesterday as Wall Street waits for today's Fed decision on interest rates. Oh, Lord, I can't wait till this is over. The Dow. Hey, look at this. Up 73 points. We are back above 11,000. NASDAQ. The NASDAQ Composite up more than 21 points. S&P 500. S&P 500 up 10 1/3 points. Not bad. Light sweet crude, up half a buck, 72.70. I mentioned this before, and I will mention it again, and Bob Bazzani will probably mention it as well. Bob, that I cannot remember the last time I saw such an overwhelming imbalance between up volume and down volume. It's now it's about 6 to 1.
Yeah. Well, what's important here is that the advanced decline line is sort of almost in balance here with the up volume and down volume. We've got 4 or 5 times as many stocks advancing as declining, Mark. And this is setting up a very interesting dilemma, folks, to the traders here. Now, look what's going on here. The Dow is in better than 100-point rally since the middle of yesterday. But normally that wouldn't be such big news. But wait a minute, we're right at the end of the quarter and on top of a Fed meeting. 2 very volatile events now occurring within the next 24 hours. So what do? Talk to a lot of these hedge fund people. You know, we had Joe Zickerman on yesterday, a well-known trader. He was saying, look, we've got problems with the hedge funds down here, and now you got a little mini rally going into the end of the quarter. What do? Do you now step back and look bad in the end of the quarter, or do you take a risk and get in now, hoping that the next 2 days are going to be good? But you don't know what the Fed's going to say, and you don't know how the quarter is going to end up. This is a real little bit of a dilemma that we've got here, and this kind of rally makes it much harder to make a decision because you're itches to get in here at this point. So we'll see what's going on here. Right now, the trader dilemma is very simple. You jump in or stay out. It's very important now. Meantime, leadership stocks today are the transports. Why is that important? Because guess what the leadership group is throughout the quarter? About the only sector up, folks, are the transports. It's up 5% on the quarter, and I'll be putting up some of these quarterly numbers, but they're awful by and large. But every single transport stock is up today. Expect some of the losers to continue to have a tough time. The semis have had a tough time, and they've been one of the big losers recently. Let me just walk over here. Come on over here to Advanced Auto Parts. It's been a while since we've seen a company come out and actually say we're lowering our guidance because oil's too high and interest rates are going up. They have said this before, but it's been a while. Advanced Auto Parts, which obviously makes auto parts, came out and said that today. Look at them, down $6.67 to $29.23. They're one of the big decliners here. Here's what they said. Macroeconomic factors like high energy prices and higher credit card payments are reducing discretionary income for lower and middle income customers. We'll see if we hear more of this later on, but I suspect they're in a particularly sensitive category. You talked about the ethanol stocks. Unfortunately, Avantine's in the other room, and I can't see the crowd here. The CEO was on with Mark earlier in the morning here. But bottom line is this, 37 to 41 is where we were at just a couple of days ago, was the pricing at 8 million shares. Overnight, they priced 9 million shares at $43, and I am still waiting for that to open at this point. Don't have any indications on that. So, Liz, the important thing here is if you see this thing go up right now, if the Dow starts moving up over 100 points, a lot of traders are going to get very nervous about the need or whether they need to jump in at this point for the end of the quarter. Back to you.
It's been quite erratic over the past couple of days, Bob. Thank you so much. Looking at treasuries right now, we've seen at least some retrenchment here. Bonds recovering ground after sliding yesterday to historic